For more on the war's economic impact, Marc LoPresti is a senior market strategist and the CEO at Market Rebellion. Also with us is Tim Desher, the executive director of Unleash Prosperity. Good morning, gentlemen. Great to have you.
Morning.
So, Mark, starting with you here, could an extended war in Iran tank the U.S. economy? What are you watching, as well as what we've been seeing recently with Secretary Bessent coming out saying that we will have naval ships potentially escorting the oil out of the Strait of Hormuz? Your thoughts?
Well, listen, what we've been watching is the market's reaction to this conflict, right? We woke up Monday morning with a war we did not have on Friday. And despite that rather surprising news, maybe not too surprising given President Trump's signaling that we needed to do something about the world's #1 very out in front sponsor of terrorism. And the market has, look, there's been volatility, yes. Volatility has spiked and then come back down day after day since this started. We have seen the market able to, by and large, rally and do quite well. To see the VIX, guys, around a 21, where it is right now, that's the volatility index, or the fear index, as many call it, around a 21 when we've got this kind of global crisis going on, tells me that investors and traders have confidence that this will not be a prolonged war and that the U.S. will come out even stronger economically when the day is over.
Very well said, Mark. And Tim, looking at Wall Street, the Dow swinging more than 1,000 points during trading before recovering some of its losses, while European stocks also fell as investors worried about the Iran war, that it could actually last a little bit longer than some people anticipate. Now, with what Mark said, Tim, I also want to actually invoke in this conversation what the CEO of Goldman Sachs said. He says, you know what, the reaction on Wall Street is benign. And it actually took him by surprise because normally going by past trends, like Mark said, everything was fine on Friday and then all of a sudden a war on Monday, and the markets, they do not like uncertainty. And in the past, it's been extremely volatile and took time to recover. So what do you make about the quick rebounds?
Well, Mark, first of all, Mark, that was a great summary, and I appreciate that because it sets me up to talk about a little bit as to maybe why that is. And think about this, John and Krisha. You know, in 2022, at the beginning of the war in Ukraine, oil spiked to $120 per barrel. We haven't even broken 80 at this point. So what does that mean? It means a couple things. One, look, Iran only has so much capability without having allies join their cause. Nobody is joining their cause. Nobody's helping them. As we continue to take out their capabilities, I think people see that this war isn't going to last very long. Iran only has so many missiles. They only have so many ships. They only have so many tanks, blah, 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 blah. So that's one. The second one is drill, baby, drill, as Sarah Palin said back in 2008. Drill, baby, drill. That has been the mantra of the Trump administration. The policies coming out of the Trump administration has been, we are done relying on the world for oil, for natural gas, for liquid fuels. And that's showing now because the U.S., John, the U.S. is now producing more oil and more liquid fuels, 24 million barrels a day. That's more than Saudi Arabia and Russia combined. That is a huge number, and that also spikes confidence in this market, and I think that we're seeing that reflected, as Mark said.
And to your point, I would add just one more thing. Not only are we engaged in war, but this is a different type of strategy here. We've seen risk mitigation. What do I mean by that? U.S. military is escorting and protecting oil vessels, tankers, if you will, through the Strait of Hormuz. So that way the oil flow doesn't stop, and it actually helps to stabilize global energy markets.
Yeah, it's such an important point. And Tim, you're with Unleashing Prosperity, and that's exactly what President Trump has tried to do here. He's diversified away from nations who we know for a fact are working against us. We can't rely on their oil. And to John's point, yes, the U.S. is escorting those ships out of the Strait of Hormuz, where about 1/5 of the world's oil supply passes every single day. President Trump saying the U.S. will work to protect the maritime Gulf, especially energy shipments here. So In terms of what we could see, though, in the future, Mark, could these actions really stabilize global energy prices? Where do you expect prices to go? And how will this affect the global supply chain, if at all?
Yeah, well, it's going to affect it dramatically. And I said on this network yesterday, at least twice, we're not going to see $80 a barrel oil for all the reasons that we just covered. But one thing we haven't talked about, and it's so important to this conversation, is the China factor. President Trump's strategy has now taken China's second favorite, or certainly first in the order of the amount, supplier of oil to the Chinese economy and the Chinese military machine offline. Let me put it bluntly here, guys. China no longer has the ability to take offensive action against Taiwan. That is off the table. That is a stabilizing force. That's something the market does not need to worry about anymore. It was one of the biggest concerns we had coming into the president's second administration, coming into 2026. That is off the table. China does not have that capability anymore to take offensive action against Taiwan. And I'll tell you what, when it comes to the trade war, I referred to this yesterday on this network as a TKO, a total knockout in the boxing match on the trade war front between the U.S. and China because of the impact it's going to have on China's GDP, not having access to that Iranian oil. That is good news for the American economy, and it's good news for global geosecurity.
And we have to watch today's news, but we also have to watch the 3-month, 6-month price of oil contracts. But Tim, today, in about 20 minutes, the Bureau of Labor Statistics will release the U.S. jobs report. Now, what are you expecting?
But did they used to release the jobs report on Friday, John? I don't know what's going on anymore. I mean, this BLS continues. Look, I think that we're going to continue to see these investments take over through the one big beautiful bill. I think jobs, in healthcare, we're going to see, we're going to continue to see a rise in that. I think that we have yet to see, construction has been strong in the past couple of reports. Manufacturing was strong last month, so I think that we're going to continue to see that rise as we get these investments. And I saw investment numbers the other day come out, John, and they are sky high at this point. People have been getting off of the sidelines that own companies. They are making their investments. And so eventually that does materialize into more jobs. But I will say, with AI coming on, with efficiencies increasing, we're going to start to see that continue to, be a push and pull on the current jobs number. But I think it's setting us up for greater numbers down the road, John.
Yeah, it's clear that there will be volatility with regard to the job reports numbers when they come out. Thanks so much, Mark and Tim. We appreciate it.